welcome to special coverage of Global Fintech Fest Day 2. I'm Ankur Mishra. In next half an hour, we'll get you all the details that happens on the ground at GFF. And on day 2 especially, the fintechs as well as banks did acknowledge that there is a growth in demand, but more importantly, the innovation is going to be the focus area of both banks as well as fintechs. But let's get started with the important comments which came in from Reserve Bank of India Governor. He did acknowledge the role of fintechs, but also mentioned that Reserve Bank of India is going to announce norms for digital onboarding.
The DPI underpins India's digital transformation over the last decade or so. It rests on 3 layers, as all of you are aware. Each layer has been playing a very critical role in addressing the barriers to inclusion and enabling innovation at scale. One, the identity layer, anchored by Aadhaar, with more than 1.4 billion enrollments, has made it possible to authenticate identity instantly. It has enabled millions, 560 million, to open bank accounts and participate in the formal financial system through the electronic KYC. It is the core of DBT for government benefits. 2, the payments layer, which translates identity into action, into transactions. The AEPS, Aadhaar-enabled payment system, has enabled banking through micro ATMs to the remotest corners of our country, through the business correspondents, through the bank Saktis and so on. Complementing these layers of the DPI, we have the vibrant fintech ecosystem, which we see over here present today. The foundation of DPI has allowed these fintechs to set up quickly and to scale rapidly and deliver targeted solutions to not only address current but also future challenges. Today, India is home to 10,000 plus fintechs, more than $40 billion US dollars of investments over the last decade, phenomenal growth.
It's not only in India, the global policy makers are acknowledging India, and they are saying that the digital transformation India has is something to be learned about. In fact, the Denmark central bank governor did acknowledge that he is going to take learnings from India.
It's also important to keep things in perspective. So, for instance, for the Danish economy, our estimates, in the short run, it reduces growth by 0.5%. Which, of course, is a pity, but it's not, I mean, we can deal with that. We had a very high growth rate last year of 3.5%, which is high by European standards. Now we're down to 2%. We're still growing. Employment is still rising. So it is a drag on growth with these tariffs, but it doesn't stop growth. It doesn't cause recession. That's certainly not our forecast.
In terms of interest rates in India, yes, India's central bank has cut 50 basis points in last monetary policy, but overall they have kept the rates steady. And also the expectation is that in months to come, maybe there may be one more cut in near future. How do you see the interest rate trajectory, especially in Asia, versus the scenario which is there in Europe?
So in Denmark, we have a very special setup because our currency is pegged to the euro. So interest rates decision in Denmark is really about following the interest rates in the eurozone. And if you look at that and the market expectations there, they're expected to be more or less flat for the next year or two.
Going forward, we will see there will be a lot of demand in the space of digital lending, who is actually catering to the segments which are either have a limited access to the formal credit ecosystem or completely, untapped geographies, untapped segments. So the initiatives taken by the government and the regulator putting together the technology infusion will ensure that there will be a lot of demands coming forward. And digital lending will definitely, going to play a very, very critical role.
Right. We were speaking about economy now. Reserve Bank of India forecast says 6.8%. There has been several upgrades if you talk about in last 3 to 4 months, and rating agency upgrade has also happened. Do you think we have potential to grow beyond 7%?
I believe credit is going to play a very, very critical role. It fuels economic growth. If you historically see the cross-country, data, there is a very, very, direct and positive relationship between private credit to GDP and the growth of a nation. Having said that, India today stands roughly around 50-52% private credit to GDP ratio. If we expect, India to become, $30 trillion economy from 4 trillion what it stands today, so the credit has to, multiply. It's, it has to triple or maybe quadruple from 50% to more than 150%. So it will enable that the, economy will grow at a very consistent and sustainable level, 6.5% to 7%. And that will actually, in a way level, because a lot of digital public infrastructure have already been, putting in place. We talked about payment. India is actually, leading the world. More than 50% of the real-time digital payment is being happening in the country. And lending also, there are a couple of, initiatives being going on. RBI recently, launched the unified lending interface, which will democratize the lending as a product, which will be, at the tip of a finger, tips in the mobile of an individual. So that will integrate a lot of, data which are available at different places, but in an isolated manner. So unified lending interface, platform like Jan Samarth, which was recently launched by Ministry of Finance, Department of Financial Services. It's aggregating the different loan products into one common platform, then aggregating the different data sources, like there is a agri stake account aggregator data. So these data are being consolidated in one place so that the institutions have a better credit assessment and underwriting capacity. So going forward, visit lending, payment, I think in a way, enable India to grow at a sustained 6.5 to 7%.
The fintechs are now acknowledging that there is a growth, and they are believing that the second half is going to be better than the first one. E-commerce is a very priority segment, right? And so far as e-commerce has grown, I think around 61%. If you look at, the first quarter of this year versus the last quarter, same time, last year, same quarter. BFSI is, I think, up around 42%. Cross-border, as I was talking, it's up to 50%, right? So those are segments, as you can see, right? And we have made good progress. And then that growth is way more than what the market is growing at, right? So definitely, that's a sign that, we are growing, and that's why we had, as I said, we had a good quarter, right? And if we continue the performance, we'll have a good year. And what are the plans for listing? Listing, I think, as I said, right now focus is on innovation, being an innovative company, and grab market share. I think listing, when the market is right, I think we always have to be ready for listing, is what I think the experts say. And when the time is right, I think we'll go for it. But right now the focus is on innovation and market share. One last question before I let you go. When you talk about innovation, how you plan to differentiate yourself from the other companies which are there in the market? Right, I think there are the basics, which is speed of onboarding, speed of the developer experience, using AI to make sure that your support experience and the payment experience is perfect, right? We don't want merchants to have support tickets when they're using cash free. We won't want the customers of our merchants to have any issues when they're using cash free. So we are very obsessed about these metrics that we track very closely. And then there is the product angle, right? I think I was talking about cross-border payments, both money going out of India, money coming into India. I think there is recurring payments that has really taken off. There is the new ways of authentication, which is the biometric payments, right? All of that we're going to see. So a lot of innovation that is happening. So stay ahead of the innovation curve. Be very obsessed about your operations and the customer experience, and leverage AI and technology to the best advantages, right? So I think that's what matters.
We are by default India's #1 choice for a safe second account for 3 simple reasons. First, the account can be opened in 3 minutes digitally. Second, the account has a zero balance requirement. And third, It can be used digitally, instantly, the moment it is set up.
Okay. So you are confident that going ahead in payment bank space, there will be a lot of growth because mindset shift is happening. And what other avenues will be associated with payment bank space?
We personally believe that the opportunity for the safe second account is a 50 million opportunity. So there is a very large room for growth in the urban space. The payment bank model itself started in rural India, selling primary accounts in rural hinterlands, primarily for government benefits. That itself is another very large opportunity. And equally, it has a very large opportunity to power payments of all kinds for businesses and retailers and merchants across the country. So as Digital India grows, payment bank opportunities will keep growing, and that's very evidenced in Airtel Payments Bank's results over the years. As you know, Airtel Payment Bank is profitable, has been profitable for the last 4 years, and if you look at quarterly results over the last 8 quarters, we have shown QOQ and YOY results which are in high double digits over the last 3 years.
In any kind of financial ecosystem, I think if you are working in a financial ecosystem, you will always see an upside and downside.
Right.
It's a time, it's a phase, it will go over. I think every 4 years we see a lending cycle. It was there around, but I think India has done well. It is coming out of it through the help of policymakers and the regulators' interventions. The right steps have been taken. And I think we have emerged strong as a financial backbone of the country, from whether a small financial institutions like NBFCs or a large public sector or a private sector bank. Everybody are coming back, launching many new products to include the lower strata, which is in the far east or a far north or a far south from a financial inclusion agenda. So overall, I see very positive vibes and sentiments in the financial industry.
You are a B2B company, and from that I want to understand that the numbers which has been disclosed by many of the banks have been quite encouraging. We have heard the commentary that on-ground demand has increased.
Yep.
How's your response from the clients per se? Are you getting more orders?
See, fortunately, we work with almost all the financial institutions in the country and across 18 other geographies. What we are seeing is that in certain products, demands are, I think, at a constant level. It has not gone down, but it has not increased drastically, which is largely on the unsecured product side. But if you see a lot of products, like if you see the last quarter, I have seen secured products for any bank for the longest times has done much better than the unsecured products. That means there's a shift or a pattern change in terms of the demand.
It's not only fintechs, but even banks are acknowledging that there is a demand, and especially in retail loans.
There has been a uptick on the consumer financing, what we have seen, whether it could be auto loans or the other unsecured personal loans. There's been a general uptrend across the industry, not necessarily for SBI. Obviously, as you mentioned, we can't discuss about the numbers now at this silent period. Our home loan growth always has been, which is nothing to do with the GST, but has been robust. So we have seen an improvement in terms of the credit offtake. And some of the numbers which the banks have announced has indicated that the credit has been good in the Q2.
Right, but as far as the impact of GST and all these announcements are concerned, only 7 to 8 days if you talk about in Q2. So in Q3 and Q4, is it safe to assume the number will be much better and bigger?
So generally Q3, Q4 are good quarters for us. Even if the GST were not there, we would have had a good quarters. It is a busy season, what we call festivals, marriages, and also you have economic activity picking up in the second half, monsoons over. So I think this will be further aided definitely by the GST rationalization which has happened now. And we look forward to a good credit growth in the Q3, Q4 too.
Right. Last time when we interacted with you at GFF, this venue itself, we spoke about 1 lakh crore net profit. I know we have interacted about it during the year also, but with the kind of demand which is coming now, do you think it is going to happen sooner than expected?
No, I think let's not talk about the timelines. The objective is that this is capability of a large bank like SBI, which has invested in technology, digitalization, and seamless customer acquisition, and the customer trust which is built over the years. We believe that that 1 lakh crore milestone is only a simple milestone. One of the biggest the reform which has happened is in the GST space for the last so many years. I think one is the simplification of the rate cut, and the process has also been made very, very convenient now. The rate cut which has happened, that is going to bring transformation in the entire economy of the country now, because it is impacting to each and every citizen of the country now. If you see the day-to-day uses what the people do it, now there the GST cut has been made zero now. So the impact is that disposable income of every individual is going to increase now. And once the disposable income is in our hand, definitely that is going to impact the economy. Definitely they are going to go for the purchasing of the various consumable items. Second impact which I am seeing it in the retail piece. Retail, again, there are two important segments, housing loan and the vehicle loan. And for the last around 15 days of this implementation, lot of tractions which we are seeing it in the vehicle loan now. Yeah, because one is the rate cut and cost of vehicle, because of the tires and all also rates cuts have happened. So that price has also been passed on to
the demand is there, you are saying?
Demand is there, and since we have the liquidity, rate of interest is also very, very reasonable now. So all those things are driving the retail piece. Housing loan, again, there is a rate cut in the cement, 10% cut is there, a very substantial number. So that is going to boost the housing loan demand in the market. And bank like ours, we are prepared to cater the needs of those people now. Both these products, we have brought it in the end-to-end digital also. We have the digital vehicle loan. You can go to the showroom, go to our site, apply for the loan, and within half an hour, you will get the sanction, documentation and disbursement, and the dealers can be made the payment online now. Even the housing loan also, end-to-end digital piece which we have brought in now. So we are making convenient to the life of the people who are going for the credit for these loans now. Second impact which I am seeing it on the agri front also, and all these impact which I am talking about is not for 1 month or 2 months. It is going to happen in the economy for a very longer period now. So all those things put together, I am expecting that 1 to 2% further growth in the credit piece should happen because of this GST rate cut in this Q3 and Q4.
So you're saying 1 to 2% more credit growth can be there than the earlier anticipation or the guidance which bank would have given?
Absolutely, absolutely.
Okay. And talking about these sectors which you have highlighted where you are seeing demand, which will be kind of a T20 kind of sector of growth where the huge growth is possible? Which are the sectors you see sustainable, the test cricket kind of a growth will be there?
See, retail, there will be immediate impact is happening now because people were waiting for this rate cut to happen. And once the rate cut has happened, immediately the people have gone for the vehicle purchases and the housing loan bookings. There are another two important factors. One is the festival time. And every year we also see that Q3 is the busiest season for the bankers. So GST rate cut, festival season, and the Q3 being the busiest, I think we are going to see a lot of tractions happening in the retail piece. MSME and agri on a long-term basis, there will be good growth and that is sustainable growth will happen in the system.
Agentic commerce is already happening in many parts of the world. You could argue Swiggy is agent for delivery, and then Expedia's and Make My Trips are agents for travel, and so on and so forth. That's happening all around the world, but it's going to go on steroid because of Gen AI models. And how do we go and protect the entire ecosystem while giving them the opportunity to go and use these tools to improve their livelihoods? We see this as a net new positive opportunity. What Visa is doing there, how does it help Visa first? In my mind, the way we help Visa most is by ensuring that customers have the best experience. So if customers have the best experience, that will drive usage of Visa cards, that will drive usage of our products and services across the board. So that is what we're laser focused on. In many cases, we'll go and put ourselves out there in terms of experimenting net new technologies with agents, with issuers, with merchants to see whether this works for them. And if it does, they'll enable consumers to shop in a better way than they have today. So that's our principle. How does it help customers? That's the most important thing then. And the way it helps customers is now as consumers, I can go to an agent and give them limited authority to go and shop online. And if you're going and shopping online using limited authority, then agent can only go and take action that they're authorized to do by consumers. So that's our principle. And we're doing that using existing technology, especially in India. This is absolutely phenomenal. We're doing tokenization and we're doing two-factor authentication. In India, very recently, NPCI had circular around allowing two-factor authentication using biometrics. So we're requiring all agents use existing token technology. It has to be tokenized. It has to be two-factor in an agent between consumer and agent interaction. So India is fully set up for this at scale than any other market in the world.
NBFCs are playing a big role. Fintechs are playing a big role. Now, fintechs want to come up with new models. Now, how do they test out those models? And FDLG gives them the power to do that. They go to a institution and say, okay, we have a model. We are so sure of that we believe that our losses are going to be very limited. And we are ready to share the first loss. So there are two ways to do it. One is you share a proportionate loss, and the second is you share the first loss, which is a slightly much more riskier and a much more safer option for the lender, but riskier option for the fintech or the entity which is facing the customer, because they are saying the first 5% loss, which is allowed as per RBI, will be taken by me. And a good lending book should not have a loss more than that. So you are virtually saying I'm safeguarding the lending institution, but it also helps the lending institution give you money at a lower rate, and that makes the credit available to the customer at a lower rate. So it's a very exciting proposition. It's good that some rules have been put around it, and I think it will be a very positive step for the industry.
The RBI has also put more guardrails to check defaults in retail loans. That has happened some time back last year. So how have you seen growth in retail so far?
Guardrails for the industry is very, very important, because people need to know what is the rate they are borrowing at, and they cannot be taken for a ride. When people are taken for a ride, it spoils the name of the whole industry and it spoils the whole credit growth. So those guardrails were very important, but with the guardrails also, it makes expansion possible. It makes life much more clearer for new fintechs, new opportunity. Okay, these are the rules I have to work within. Can I create some USP there? So I think overall in the long run it is going to be very productive, very positive, and I am very bullish on it, and I can see that there's a lot of excitement in this sector, and this is growing, and money is going to be available to Indians, and that is going to fuel India's economic growth.
While day 1 and day 2 was action-packed at Global Fintech Fest, now all eyes will be there on day 3 when UK Prime Minister as well as Indian Prime Minister Narendra Modi are going to speak, and we will keep a close watch on that.